Gold basically says when markets go up, the equities market, sometimes gold goes down. Sometimes when equity markets go down, gold goes up. And so it's kind of unpredictable, but you can kind of watch it. You can also watch the dollar. So if the dollar is going down, typically we see gold go up. And if the dollar, US dollar, goes up, gold will go down. And so nothing is exact, and it's not always true. So I tell folks, if you're going to get gold, are you buying it for momentum? Are you buying it because you're using it for bartering later because you feel like that's something you need to do? So you have to figure out why you're using it, why you're going to buy it, because there's some positives and negatives, so pros and cons. So let's talk about the pros. So the pros are it's an inflation hedge. So you can make a lot of money on it, right? But here's the problem. It's illiquid. You need to know a lot about gold and when to buy and sell it, because you could also lose your short. So you can't take income from it, and it's not liquid. But the pros are it's an inflation hedge. We see historically when we're getting ready for an election, we'll see gold go up because people are just not sure who's going to be president. And there's always this back and forth. So they feel safer in gold, and which is okay as well. But the question is, if you're going to get these commodities, gold and silver, how much should you have? And so I tell folks, and it's also individual depending if I get to speak with you, if you have a portfolio, your liquid part of your portfolio, 401ks, IRAs, individual accounts, no more than 10% of your portfolio, whether you go buy it from somebody or you have your advisor buy it for you, and or if you hold it. So, but then I've seen other people where they get a little bit more, and some people they get a little bit less, and it depends on what you're trying to do. So the return on investment can be very hard. And so if the market goes up, most people tend to buy gold at a high and then they sell it at a low. So that's normally even when you're buying stocks. You buy high, you sell low. That's just our emotional state that happens. So remember, gold is, for the long haul, unless you're really good at trading. Silver is more volatile than gold, right? Yes, the price is lower, so you can buy more, but it's more volatile. So be very careful when you're, especially nearing retirement, what you're trying to get. Because some people's like, Charisse, should I buy more silver? Should I buy more gold? So let's just talk about silver. Silver, once upon a time, was used for photography, but since digital cameras come out, it's not as much used for that. But it's used for industrials, electronic appliance, semiconductors, microcircuits. I didn't even know that, and batteries. So silver has become a commodity because we're using it for so many things. And who knows, maybe in the future we'll find another use where we could use it for more things. But in the meantime, I'm not investing in silver, if anybody wants to know. I do like some gold.